Brantley. I'm the Vice President of Research at Likefolio, and the topic of this presentation is how to use social data to spot opportunities. I think that this is a pretty unique approach for investors, and this is kind of an extra tool that you can use in your toolbox in a different way of thinking about things and approaching investing. So this is just regular disclosures and disclaimers that, you know, I'm not an investment advisor or broker. Likefolio is not a broker. So essentially, Likefolio's mission, we try to detect shifts in consumer behavior on Main Street before it becomes due on Wall Street. So we're using social media, Twitter specifically. We have a partnership with Twitter that allows us full access to their entire fire hose of tweets. So we're able to go back in time. We go back to 2012, and we can form these really targeted searches and queries to understand, you know, what consumers are talking about on Twitter. You know, we're listening for brand mentions. We're listening for also just general behavior mentions, general things that people like talking about. I think that it's similar to how you would envision a, you know, Google Trends, you know, learning and listening to how people search on Google and what's relevant to them. We're trying to do, and we are doing the same thing, but with Twitter. And so for us, whenever we're listening for consumers on Twitter, we're keying in on a couple things. One majorly valuable thing that we're keying in on is purchase intent. So we really want to listen for when consumers are talking about actually completing a purchase on Twitter. So whether they're talking about buying a new iPhone or buying a pair of Skechers, like this example lists out, or maybe they're talking about going to eat at Denny's, you know, something that indicates that they're spending money or that they're engaging and interacting with a publicly traded company. It's also really important for us to listen to sentiment key indicators. So were they happy with that engagement with that brand or that company on Twitter? Were they upset with it? Was there something that they don't like about a new product, or maybe that there's something that they do like? All of these are really valuable. It's especially valuable whenever you compare these metrics over time against itself. You know, whenever you start to see and you're able to look, for example, at an iPhone, you know, during their keynote release, whenever people start talking about wanting to buy an iPhone, are more people talking about it this year than last year? If so, that's a really important indicator and something that investors should know moving forward. On the same token, sentiment can be a really important indicator over time, especially when you start to see that sentiment degrade. You know, if you're the holder or owner of an equity and you start to see, you know, just extreme deterioration in consumer sentiment, you start to see a drop in purchase intent. That's something that you're going to want to take a look at your position. You're going to want to think about long-term what your goals are and what your plan is. Now, it's also vice versa. You know, maybe you can use this to spot opportunities to say, oh my goodness, there's this brand or there's this company that they are, you know, they're selling products, things are flying off the shelves, and maybe they haven't reported yet. Really good example of this was Hydro Flask. I don't know if any of you guys own a Hydro Flask, or maybe you buy one for your children. It was a craze over the past summer, and it's something that we really watched and we were able to get ahead of. And sure enough, on their earnings, Helen of Troy, you know, touted the success of the Hydro Flask brand. So it's just important to kind of keep a gauge on these metrics. Another metric that I didn't mention was volume. You know, while purchase intent really helps us draw conclusions about anticipated revenue, just volume level is helpul to know, are more people talking about this brand? Is it more relevant for consumers now than it was before? We really thoroughly test our data. So we went through a process with Georgetown University where they found that our purchase intent specifically was predictive of both upcoming sales and the unexpected component of sales growth at the firm level. So this was really positive for us, and our theory. You know, we knew that we were seeing these patterns and we were seeing these trends, and we were able to predict when a brand or a product was taking off or when it was struggling. And this study confirmed these findings. So now, how do you use this data, and how are we applying this mass of Twitter data and this influx of tweets to the current market environment? This is just to set up. I think it's impossible to talk about spotting opportunities today without addressing these coronavirus fears and addressing that the market and the environment that we're working in right now. You can see this is just an example of performance over the last a little over a month. You can see extreme volatility. Obviously, the market's down. And in general, you know, I talked about that we listen for Twitter on brands, but we're also listening for those behaviors as well. And so this chart really showcases mentions of coronavirus fears among consumers. So just people talking about the coronavirus, and you can see the sheer volume surge. If I were to zoom out, you know, we were tracking this ongoing just from a SARS and MERS perspective a couple of years ago. And when you zoom out, you can't even see those mentions because the current environment and the current volume of tweets that we're seeing around related to the coronavirus is so large. It dwarfs everything else that we've ever measured. I think this is the number one tag, the number one trend that we've ever tracked, just to give scale to how significant this is in consumer life. I think you'll see that recently, you know, this is a chart that goes through yesterday, and you can see that mentions are kind of dying down a little bit, but what we're observing whenever we look at mentions is that it's becoming harder to measure when people are talking about the coronavirus because they're not calling it out by name anymore, right? They're just talking about it or talking about, you know, staying inside or different shifts that are underway as part of a new normal. But it's still extremely relevant. Any volume level that crosses 1 million tweets threshold on a single day, that's absolutely incredible. This is another view. So while we listen to the consumer in that view, this is a view of investors. This is how investors are approaching the current market environment. It's a really good pulse check of volatility. I think if you compare this with the VIX, it's very similar. And so you can see that we're still in definitely a volatile and an elevated period. So it's important whenever we go through and we're trying to identify different opportunities, we're trying to identify winners and losers in this sea of companies where it seems like everybody is struggling, that we take into account just how volatile the market is right now. So looking ahead, this is how our team at Folio is approaching things. So we're looking for these macro trends that are shifts in consumer behavior on a major scale, that a lot of these we were watching beforehand, but maybe now they're accelerated because people don't have a choice. And we'll go into a couple of these examples later, but you know, we're listening for how are consumers shifting their behavior in response to this new normal, living among the coronavirus, social distancing, and what are the implications and the ripple effects? You know, how does this affect different industries? We're also trying to identify these best of breed companies. We know that a lot of companies are going to have major short-term pain. They're going to have significant loss as these behaviors shift, as consumers are legitimately unable to engage with some brands due to the nature of the brand. So this is something that, you know, obviously investors are aware of this, and a lot of companies, especially from a stock valuation perspective, they're down significantly. However, if we know and we can identify these best of breed companies, we're better positioned to long-term identify these winners and, you know, start to take advantage of future gains and try to best predict future gains. Next, we're also watching some companies that are receiving a massive adoption spark because of this. I think that the first, that obviously, and it's an extremely obvious example, is Zoom video, which is how we're all engaging right now. So obviously, we've all been using this. We've been doing these, you know, these webinars, and I know I participated last month, and said that this was really before a huge surge in coronavirus fears really picked up. But now I think everybody is using Zoom video. And so we're watching this huge spark of consumers flood into these different markets, not necessarily out of choice. And what we're trying to see is, okay, in what instances are these consumers who just adopted this new platform, or they're starting to engage with this new company, now are they going to stick around? What is the long-term projection for these companies, and which can we isolate ones where this is going to continue to add value? These companies are going to continue to grow even when life, quote unquote, returns to normal. And then finally, we'll touch on some pent-up demand. So one theme that's emerging as we look at our data is that people are talking about, man, I can't wait until I can go eat at Texas Roadhouse. I don't know, just an example, but this idea of things that people want to do, but maybe they can't do yet. And so trying to gauge that pent-up demand and anticipate future spend and kind of measure that out on a long-term scale. So the first macro trend we'll take a look at, I don't think this is shocking to anyone, this is food delivery. I know that I personally had Chipotle delivered for lunch today, but this is looking at grocery delivery. This compares the year-over-year increase in purchase intent for a lot of different types of food delivery. And you can see across the board, it's absolutely impressive. You can also start to see certain names kind of rise as leaders. Obviously, look at Costco grocery delivery, Amazon grocery delivery, Target, Walmart. These are all big retail names that are not surprisingly and not shockingly benefiting from this huge shift to now it is safer to have groceries delivered. And a lot of these companies were already well positioned and were getting into this grocery delivery market, and now this spark has forced way more people to adopt their platform. So does this translate to long-term users? Does this translate to more Amazon subscriptions if people are like, you know what, I guess I'm gonna go ahead and bite the bullet and pay for another year of Prime or join Prime if that means I can have my groceries delivered. For this example, let's dive a little bit deeper into generic food delivery. So this is consumers who are talking about actually using a food delivery service. So maybe they're using Grubhub, maybe they're using Postmates, maybe they're using Instacart, maybe they're using Shipt, whatever they're using to have food delivered. And you can see just an extreme surge since March. We can dial this down to the brand level, and it really helps demonstrate kind of, what companies and what names and what brands are rising to the occasion. You can see across the board, this is an example of a rising tide will lift all ships, because there's significant growth for every brand that we're looking at since March. But you can see DoorDash really elevating themselves above the rest. When we look at sentiment, this is also similar. And so what we can do is we can say, okay, there are a lot of brands or a lot of restaurants that partner with these different names. So when I look at a DoorDash, I think, okay, who are they partnered with, right? I'm thinking who would be using DoorDash, or who is DoorDash helping to deliver food for? And one that immediately comes to mind, I know I just used this as an example, is Chipotle. And so we can dial in on actual mentions of consumers who are getting food delivered from Chipotle. And so even though they're buying their food and they're getting delivery through Chipotle's app, the actual execution is through DoorDash. And so what all of these different pieces of this puzzle kind of put together is that one of the major winners from a fast casual standpoint right now is Chipotle. So even though people can't go and sit down in the store and eat, and obviously there are going to be short-term ramifications, I think that the stock is down significantly. But this is a name that I would look at as a potential long-term opportunity, because Chipotle is building this huge list of consumers, and they're getting consumers used to engaging with them directly. I know that even anecdotally myself, I ordered lunch from Chipotle today because around 10:30, Chipotle sent me a message and said, hey, you know, we have free delivery. Did you know that? Like, did you want to get something delivered? And I thought, well, yeah, absolutely, I do. And so the ability to create and initiate these transactions and get consumers used to interacting on their platform demonstrates long-term potential. When we compare this with other names, we don't see this type of trajectory with other names. You know, we're not seeing this alongside of like a Starbucks or a McDonald's or other popular fun-ish restaurant foods that you would want to receive. So this is definitely one that we're watching for the long term for continued execution and potential retained habitual users. Another macro trend that we're following pretty closely is gaming. So full disclosure, gaming, and especially like PC gaming and online gaming, this is not my wheelhouse, but we are really good at listening for when consumers are talking about gaming. And so this chart that you're looking at right now, these are mentions that we're tracking of people who are taking up video games for the first time. So these are first-time gamers. You can see obviously gaming has been increasingly popular since we've been tracking this trend, but even more so the acceleration since everyone is stuck inside is pretty impressive. So, you know, for us, we're wondering, okay, what kind of games, you know, what are they taking up? What brands and are stepping up to kind of meet this need and fill this entertainment gap that people are missing because they're stuck inside. We track a couple of other trends just for reference. Generic gaming in general is up about 20% year over year. So not necessarily new gamers, but just people talking about playing video games is up. And PC gaming specifically is more and more popular. One name that we look at specifically is Activision. And so Call of Duty is one of their most popular games. And what we're seeing is we're seeing this overlap. So when we look at those tweets of these first-time gamers, like I mentioned, this is kind of where our eyes diverted whenever we're performing our qualitative analysis. And we say, okay, so people are playing Call of Duty for the first time. They've never played before. This is significant. You know, these are new users that are being brought to the table by this, you know, this outlier event. And so we track these Call of Duty gameplay mentions across the board. And so what you can see on this chart, this last drop that was in October when they released the last game, it was very popular. And I know that they reported success, but what you see recently, that last little uptick right below that Call of Duty logo, that's unprecedented, right? In March, you don't typically see that level of adoption and of mentions of people playing Call of Duty. And so we dug in and we were like, what is going on here? Is this just because of the, you know, is this just because people are quarantined or, you know, what's happening? And what we found is that Call of Duty released this Warzone game mode. And this mode was already planned. So this wasn't like a special release that Activision was like, oh, we're going to take advantage of these people that are sitting at home. It was already planned, but it was definitely fortuitous timing for the company. And what it is it's a free-to-play version. It's been described to me as battle royale-esque. So along the lines of like a Fortnite that was so popular. But the key here is that this game also supports microtransactions. So while it's free to play, you can spend money to have special things to do or buy inside the game. And what we know is that overall microtransactions accounted for over half of Activision's revenue in 2019. So while people are captive, while more people are playing, maybe more people are buying the main game, but even when they're playing these free versions, there's still a potential for increased transactions and more revenue for Activision as a whole. So these are across the board Activision gameplay mentions. And so you can see this is a really strong trajectory for the company. And it's a huge potential to, you know, now that they have more players, can they keep these players on long-term? Like the ripple effects for Activision could be, could linger much further down the road. So that's definitely something that in the future we're going to watch to see. You know, we want this line, these mentions of people who are playing their games to keep going up, especially if we, you know, hold our bullish outlook. All right, so now we'll get into my personal favorite macro trend that we're going to talk about today, and that's discovery. So I know that, you know, we people are getting their food delivered, you know, people are playing video games. Another thing that people are doing is they're searching for things, they're searching for ideas, whether they're, you know, these are mentions of home renovation idea mentions. So, you know, whether you're sitting around your house and you realize that your sink is leaking and you need to figure out how to fix it because it's so annoying, or now all of a sudden your bedroom is your home office and you've never hated the color of your walls so much in your life. So we're seeing a lot of people who are searching for different renovation ideas. We're also seeing an increased searches for people who are looking for recipes, people who are looking for fitness routines, people who are looking for, you know, do-it-yourself projects, things to do with their kids. And so there are a couple of names that come to mind whenever we think about some of these discovery needs. And one of these is Pinterest. And I feel like people always, they give us a hard time whenever we talk about Pinterest, but Pinterest is actually one of our favorite, one of names long-term for potential growth moving forward. So Pinterest's key audience, what we know is that Pinterest claims it's about 8 out of 10 moms in the US, and that these moms, these are significant household buyers, right? They have a lot of purchase power. What you can see on this chart, so these are mentions of people who are downloading or using Pinterest. And in the last week, that purchase intent level is up extremely high as people utilize the service. And the way that I think about Pinterest is that Pinterest with advertisers, it's almost like shooting fish in a barrel, right? Except for the fish actually want to be there and they want to be shot, because you have this captive audience of people who are actively going to Pinterest to seek out brands and products and things that they want to buy. So, you know, it's not like Pinterest is often described as a social media, but it's not social media in the sense of a Twitter or a Facebook where you're scrolling through and you get annoyed by promoted ads, or you get annoyed on Snapchat when an ad is thrown in the middle of your feed. This is something where it's almost like a catalog where you're sorting through the ads that you like and the ads that you want to see. And obviously this advertising revenue, this is how Pinterest makes its money. And so on its last quarter, so Pinterest has already been doing well even before this surge in activity. Their last earnings, I think that they reported the monthly active users were up 26% year over year globally. The average revenue per user that they're able to generate was up 15% year over year. They're definitely expanding internationally. And then Pinterest even came out and said that the weekend of March 21st to 22nd was the highest activity that they ever had for saves and searches. So this is something where you know, Pinterest is refining their platform and they're making it easier for brands to connect directly with consumers, and consumers are actively seeking out these brands to complete these transactions. And so I think that, you know, advertisers are taking note, and you obviously Pinterest is executing on their ability to increase their revenue and increase this advertising spend. So this is something that we're definitely watching moving forward. You know, as people start to get ideas and people get more comfortable with the platform, will they stick around because they like it? And will it become more meaningful and more valuable to them in life, even beyond, you know, quarantine? Another name that's similar to nature in the discovery mechanism as Pinterest is Etsy. So Etsy is a platform of, you know, small businesses, of small sellers that, you know, you can go and you can look to buy a lot of custom items. And we're seeing a nice curve whenever it comes to people who are actually going on Etsy and finding things to buy, right? We want to see that increased transaction rate. And so far we are seeing it. We are seeing that acceleration increase. And so Etsy does a couple of things recently that has really helped this adoption. First, they really pushed free shipping. So now Etsy is actually competitive whenever it comes to the Amazon of the world, and, you know, this new normal that consumers expect, you know, free 2-day shipping. Now, I think that sellers, that was a little bit of a shock to their system, but now that they're getting used to it, now that it's this new normal, the platform is more appealing. I think Etsy is also doing a good job with advertising. They talked about, recently with some of their top performers, their top sellers on the platform, they're instituting essentially mandatory advertising. And so Etsy will control the advertising. They're placing these ads on places like Pinterest, like Google, and they take a cut of any of the conversions from that revenue. So it's a little bit out of the seller's hands in that sense. However, it's definitely bringing more buyers to the table. And on a long term, we're seeing those transaction mentions increase. So this chart reminds me of Pinterest as well. This is one that it shows how Etsy's trajectory, this purchase intent, this demand, people who are shopping and buying things is increasing at an impressive rate, 33% year over year. That's definitely positive trajectory. Meanwhile, the stock is down significantly. So this is setting up to be what we like to call a divergent opportunity. So whenever we see demand increasing and the stock decreasing, or vice versa. And so this is one that we're really keyed in on. We're waiting to see how their next earnings report comes out, but this is definitely something that we've got our eye on long term that we think is setting up quite nicely. So that's kind of an overview of how we're applying these macro shifts in consumer behavior to companies specifically and identifying different opportunities. Now let's hit some best of breed companies. So these are companies, like I previously mentioned, that they're going to have some short-term pain, some potentially major short-term pain. However, they've established themselves as leaders in their respective industries. And so we can assume that these companies are going to bounce back. I think Nike is one of my favorite examples of this. I know that Nike was one that it's been my favorite for a while. I think last month, whenever I spoke, talked to people we know, I talked about Nike being an opportunity for the long run, and it still stands as a long-term opportunity according to our data. So what you can see here, this is a chart of Nike, and these are mentions of people who are buying shoes from Nike, whether they're buying Converses, which Nike owns, whether they're buying Jordans, whether they're buying Air Force Ones, whatever they're doing. And what you can see is that it's growing at a rate of 10% year over year. So even though all of the Nike stores are closed, you still have this demand, this consumer demand for Nike. And one of the reasons is because Nike has done so good at executing digital sales. I think that they just released earnings. They had they definitely surprised investors on earnings. They reported that now a lot of their stores in China are reopening. I think 80% of their stores in China are now open again. But digital sales in China during that whole process, it's approaching triple-digit growth. That's incredible. So this shows that Nike is able to execute this direct-to-consumer plan. They no longer need the Foot Lockers of the world. They no longer need these middlemen to broker these shoes and these products through. Consumers are fine and they're comfortable coming straight to Nike. And so this means, obviously, this helps Nike's profitability. But this is something where, we're just watching Nike continue to build its strength and continue to establish itself as a leader while the stock is well off of all-time highs. Another big proponent for Nike is just the popularity of their brands in general. The Nike's Jordan brand is one of the most popular sportswear brands, at least that we track. We're watching continued growth and demand for this name. So, this is promising whenever you see, okay, Nike direct to consumer, check. How do its brands look? Its brands look great. The Jordan brand is demand is 20. The last 90 days is pacing 28% higher than the same time period a year ago. So this is definitely positive. And so this chart, this is just to give scale for what is not a best of breed company. And so this is Under Armour's chart. So this is mentions of people who are shopping with Under Armour, buying products from Under Armour. And you can see that while Nike was trending positive 10% year over year, Under Armour consumer demand is down 20% year over year. And the stock is down significantly alongside the market. But in general, this isn't one, if I was going to go through and pick between this Nike as an opportunity versus this Under Armour as an opportunity, obviously like Nike is the clear leader there. The trajectory is totally different. This almost looks justified, that this drop in stock value. So this shows that Nike is obviously doing something different than some of its competitors. I know Adidas has a similar trajectory. I believe Adidas is down about 17% year over year from our consumer demand perspective. So, really isolating these leaders of industry, I think, is helpful for an opportunity. And so Nike's definitely one that we still like long term, even though short term, absolutely, there's going to be some pain. Okay, another fun one to talk about is Disney. So Disney is interesting because obviously we all know that the parks are closed. You can't go to Disneyland, and this is a significant portion of its revenue, but it's not everything for Disney. And what's interesting is that what Disney's doing really well now is they're able to capitalize on a lot of these people who are captive from a streaming perspective. So streaming would be another macro trend that we could probably dive into and talk about for a really long time. And essentially what we're seeing is these are mentions of streaming across the board. And so just to give scale, this could be somebody streaming on Netflix. This could be somebody streaming on their Roku device. This could be a mention of somebody, streaming on their Amazon Fire TV or their smart TV. And I placed the date of the Disney launch. I annotated that date just so you could see how significant of a launch it was and just how many streamers that brought to the table. This was from a product launch perspective, the highest product launch data that we've ever seen. And so we're now watching it tick up slowly over here. You can kind of see that while people are at home, they're streaming. Obviously, they're watching more and more TV, and so Disney definitely stands to benefit. We're also seeing improvements in Netflix and Hulu too, because obviously there could be more than one winner in this game. But this is something that it's important to watch moving forward. Of are these new streamers, will they stick around? Is this going to be a consistent stream of recurring revenue for Disney? It's definitely something we have our eye on. And it's also one of those companies that, we know that, what's the one thing that you might want to do as a family whenever you finally can go out again? You probably, maybe you want to go to Disney World. So this is one that's been, I think it's been hit significantly, but from our data perspective, it has diverse revenue streams and it has a lot of positives going for it during this time as well. So this would be one of those, one of those best of breed names that short-term pain, but a long-term opportunity presenting. So now we'll go into some of these adoption spark potentials. I gave the example of Zoom earlier, and I have a couple of different examples to share now with names that we're watching. One of these is Peloton. I don't know if you guys have ever used Peloton or if you've been introduced to Peloton now that there's, you can't really go to the gym, right? You can't. I know for me, I was a Planet Fitness subscriber, and now I can't go to Planet Fitness. So I am now a Peloton member. Peloton actually has a special right now where you can get 90 free days of their digital membership. But this is just to give an idea of, essentially the idea is that Peloton has created an access point for people at a really low price point. And it's a stream of recurring revenue for them. And we're seeing adoption mentions skyrocket for Peloton right now. I don't think this is brand new information either, but I wanted to highlight the model that they're creating. They're creating and they're giving people another means and a very affordable means to complete workouts, to exercise, to have a full library of different types of exercises, whether it's outdoor runs, whether it's yoga or strength or meditation. They're engaging with consumers, and the sentiment is skyrocketing as demand is skyrocketing. And a lot of times whenever we see purchase intent increasing, you start to see sentiment being tested a little bit because so many users are coming onto the platform and we're just not seeing that. So this is something that long term we want to watch for, especially after this, after this period where, gyms reopen and people can kind of go back to life as normal. Are they staying on board? Are they continuing to use the Peloton app, and are they lifetime subscribers? And maybe are they even going to buy a piece of equipment? And so this is for reference, just so you can see kind of the demand that we're seeing. The green line, these are mentions of people who have either bought a Peloton or signed up for some type of an app, maybe a digital membership or something of that nature. And what we saw even prior to this surge in March and early April was that this was building significantly year over year, even at the beginning of the new year. This is when, even in January, we were watching, and I think that Peloton got a lot of hate whenever they put kind of a controversial ad out, I think, or it was, I think it was divisive, or it was definitely viral and meme worthy, though, for sure. I think everybody's seen the Peloton wife. But aside from that, when we look at mentions, we're looking for mentions of people who are actually having these things delivered to their house, or actually buying a Peloton and engaging with a Peloton. So this is a very clean sample size, and it's definitely the trajectory that you would want to see for this company, especially for a growth company. And the stock is still, well off of its highs. It's obviously this is a new name. It hasn't been trading for very long, but this is one that consumer demand is building. This new normal is pushing more people into their atmosphere. And so we're watching long-term to say, okay, how many of those people are going to stick around after, and how many will, evaporate or float off? Thus far, it's setting up really nicely for Peloton. Another fun name, and another one of our favorite names that we've been tracking for a while, is Walmart. And so I show you this chart because the first time that, whenever we realized that something special was going on in Walmart was in November of last year. And you can see that, this cuts off in November, that purchase intent mentions, so people shopping at Walmart and going to Walmart, it was up 58% year over year. And whenever we dug into that, we're like, what is driving this huge, this big bump that you see right here? What's driving this mentions? A lot of these mentions were related to online shopping or curbside pickup. And so I say this, and I use this as an adoption spark example, because this confirmed that even in November, way before coronavirus fears emerged, people were already starting to adopt. They're already starting to order things online from Walmart. They were already starting to, order things or go pick them up and have them put in the back of your car. I think that it's also improved Walmart's sentiment, as now people, you don't actually have to go into Walmart. You don't have that Walmart warehouse concrete floor feely type of experience. You can just pull up and have things delivered at an affordable price or put in the back of your car. And so what we're watching now is, that acceleration has increased. You can see Walmart's been pretty volatile in the last month or two, but this demand is building. Now we're pacing that Walmart, people shopping at Walmart and buying things through Walmart is up 66% year over year. And we can dive into grocery delivery specifically. And what's interesting is that you can see a big peak. So obviously, whenever there was essentially a cutoff of, we need to be social distancing, we need to be avoiding, around March 12th, people really started like, okay, I'm going to have my groceries delivered. I'm going to shift my attitude. And it kind of waned, but we're now watching it maintain. And so now it's flattened out. And what's important is how much higher this flattened out line is than it was prior. So after we see this adoption spark, that curve, that new trough that forms, is that higher than the previous one? Because that's what tells us that these people are sticking around for the long haul. I know that Walmart also announced a membership program that's similar to Amazon Prime's, and essentially an annual subscription that you can pay for grocery delivery and things of that nature. So that's definitely something that we'll be tracking moving forward to see, okay, is Walmart now, did they capture a new consumer for life? And, you know, are they now going to have this recurring revenue from membership subscription, and thus incentivizing someone to repeatedly use that service versus another service? So Walmart would be a prime example of an adoption spark moving forward. Now we'll hit on measuring some pent-up demand. And so I kind of touched on this earlier whenever I gave the example of people saying, I can't wait until the end of this social distancing until I can do X, Y, Z. And so one of the first companies one of the biggest companies we see popping right now is Home Depot. It seems like everybody wants to go to Home Depot. It's starting to get warm outside. They've been stuck in their house. You know, we talked about those home renovation mentions. They're wanting to fix things up. They want to get out in their yards, and Home Depot, whether they're buying paint or whether they're buying patio furniture, or they're talking about wanting to buy patio furniture, it's popping. And so you can see that purchase intent mentioned, so consumer demand is up over 100% year over year. Meanwhile, the stock is well off highs. You know, Home Depot is one that we've been watching. It's had a really positive trajectory for many years. You know, even you can see the significant improvement in consumer demand from 2016 to now. And so this is one that it's elevating itself, and it is showing that people want to engage with them and are likely to engage with this company when they can, or if they can. For comparison's sake, a lot of people like to compare Home Depot and Lowe's, and this is almost like a best of breed example in the sense that Lowe's, we're not seeing the level of purchase intent growth that we're seeing for Home Depot. I think Lowe's is around 58% and Home Depot is around 101%. So, you know, a lot of times people ask us, you know, what does that gap look like? Is Lowe's starting to capture some Home Depot customers or vice versa? And what we're seeing is that Home Depot is, you know, really establishing themselves as a leader and demand is growing. One caveat I will note, though, is that we don't have any insight into, that our data doesn't, is what contractors are doing and what professional services and that segment of their revenue. Obviously, we don't, you know, contractors aren't tweeting out their orders and their behavior, but regular people like me and you are. And so this is really the insight, you know, we're giving an insight into the regular consumer, you know, your shopper that's going to go there for home renovation projects, or I would say smaller scale purchases than a professional, your professional buyer. And then lastly, so we'll talk about travel. So amidst this coronavirus craze, obviously travel companies are just hurting so badly. And the first industry that I want to touch on is airlines. And I do this because this is one way that we're approaching this opportunity, is that we're tracking sentiment related to these different travel industries. And essentially what you can see that since 2014, while there is seasonality to air travel and sentiment, recently there isn't a significant drop or a significant ding of sentiment for a lot of these airlines. And so that to us tells us, and I don't think that this, I mean, really we shouldn't have to be told this, but that people aren't holding it against airlines that they can't fly, right? It's not the airline's fault. They're not changing their perception of a brand or how they feel about Southwest Airlines because they can't fly. It's not Southwest's fault, right? So this is something where we're keeping an eye on this, but we're seeing some purchase intent increases as well of people who are talking about they can't wait until they can travel again. You know, they can fly again, that, you know, they're looking that, you know, there's this pent up demand that's building, but not every industry, especially in the travel industry, has the same results. So this is an example of cruise lines. So unsurprisingly, cruise line sentiment have absolutely tanked, but they have been falling for a while now. This is just accelerating that sentiment drop. And what also is significant is we did a special probe on on mentions of people who were saying not just that they didn't want to take a cruise, but they would never book a cruise again. They would never consider a cruise again. And when you start to see mentions like that, you know, we don't see that whenever you're talking about airlines. People aren't talking about, oh, I'm never going to fly again, but they are saying, I will never in a million years be on a cruise. You know, reason number 5 million why not to take a cruise, et cetera. So if I were comparing, you know, these travel companies that have all been hit significantly, that are majorly on sale, I probably would not be adding Royal Caribbean or Carnival to my shopping list, just because I'm unsure, based on this consumer sentiment, you know, these brands are being impacted by overarching consumer shifts in behavior, and the airlines aren't. So maybe I'm more likely to go in and key in on an airline, you know, maybe look at some fundamentals, maybe test out some theories there, maybe look for good opportunities, but maybe I'm going to avoid these cruise lines long term, just as, you know, our data and consumer data suggests that there may be deeper seated ripple effects that could come from this. And so, to wrap up everything, this whole presentation is just the concept of building, like, as an investor, building out your shopping list of, you know, what companies look like they stand to benefit in the short term and potentially long term because of shifts that are happening in consumer behavior right now, and what are, you know, who are the leaders, who are likely to be just fine, you know, whenever you look, when you think, oh, well, is this company going to be more profitable in 2021, 2022 than it is right now? These are the things that you're going to want to try to isolate and try to take advantage of, and kind of set those levels that you feel comfortable with and that you think is valuable. But I will I'll end with, if these charts, and if you're interested in consumer behaviors and following up or learning more about kind of what we're tracking, we put out something, we call it the daily drop. It's an email daily just on a trend or a company or something like that we're watching. A lot of the charts that are in this presentation are from daily drops or from some different pieces that we put out, and they're free. So if you want to go, you can go to likefolio.com and you can sign up for a daily drop and get more information. And that's all I've got. So I guess I have time for questions if anybody has questions. I'll have to see. You might have to coach me through if there's a chat.
Yeah, did you find the chat window?
I cannot.
If you move your cursor to the top, the Zoom panel should come up.
Oh, okay, cool.
And then you click on more, or the dots, or something.
Oh yeah, I'm so sorry. I have not seen I'll go through and look through these chats right now. Okay, so one of the questions is that how this data translates into actual sales and profits, because people are broke during this period. I think that, you know, what we're trying to identify is where consumer demand is being concentrated and where we're seeing sparks in consumer demand. It's helpful for us because we're able to compare companies to itself year over year. And we know then, based on, you know, back to 2012 quarterly revenue, we know exactly how correlated every company is from our purchase intent perspective to that revenue. So there are definitely some companies that are higher correlated than others. We're really good at predicting revenue with companies that are extremely consumer facing. So most of the companies that I outlined in today's presentation, you know, these are all consumer facing companies. These are all things that people are going to actually talk about buying and want to talk about buying on Twitter. And so we found them to be the most predictive, and that's why they're highlighted here. And so that's definitely valid. Obviously, we're not going to have any information on like a Boeing, right? People aren't going to be talking about buying an airplane on Twitter, but they are going to be talking about booking with Southwest. And whenever you start to see those shifts, whenever you start to see that growth in demand and that surge in demand, that's definitely a good indicator to kind of divert your eyes and take a look and then test your own theories, especially in opportunity spotting. Oop, black screen. I lost my. Sorry, I lost my chat again. I gotta pull it back up. I wonder. There it goes. Have you tested any past divergent setups and compared the company's PE following those setups to see if your divergent actually translated to a book boost to sales? And if so, what period of time was it between? So essentially, somebody's asking how long of a gap is there between when we notice a divergent and when we see that stock pop, or whenever we start to see the setup and the return. I think that it depends on the company. A good example of this for us, one of our biggest divergent plays was Tesla. We saw demand for Tesla building tremendously, and we had a bullish outlook for a long time, many months before we actually saw the stock pop up the way that it did. And I think part of that is because for Tesla, what was holding the company back wasn't necessarily whether or not people wanted to buy the vehicles. It was because we didn't know, and investors didn't know, if Tesla could actually execute and deliver the vehicles in a profitable manner. So in that sense, it took 9 months for there to finally be that realization and that actualization of that divergence. But then for other companies that are more, I would say that the relationship between, sales and their revenue is more one-to-one. There are less things like producing a car or delivering a car. There are fewer of those profitability questions in mind. Like, for example, the Hydro Flask example that I gave earlier. That was almost immediate. We really like to play these on earnings. We like to look for these divergent opportunities around earnings events, because that's where we found that, especially when we have the higher the divergence, that obviously the more likely that we're going to be able to predict an up or a down move. So I hope that answers the question. Awesome. Somebody said, say hi to Landon and Andy, our two founders. Our founders are two brothers that really developed. They got into this thinking people might want to follow the stocks that they were interested in and engage and maybe be owners of companies that they regularly engage with or bought products with. And as we built this out, realized that there was much more value, especially as we started testing and confirming that there's a correlation between that purchase intent metric, so the green line that you saw on a lot of the charts, and projected revenue. And so that's something that we try to develop products around moving forward for sure. I think that's the last question that I see on here. Is there anything else that you guys want me to hit?